Hello and welcome to our first commodity quarterly catch-up for 2025 as part of the Bell Direct Insight series. I'm Grady Wulff, Market Analyst with Bell Direct, and today I am thrilled to be joined by my good friend Hedley Widdup from Lion Selection Group to discuss all things commodities. From the M&A space to how long the gold rally has left and what Trump's impact is going to be on the commodities market, and even some miners we are watching this year. I hope you enjoy my quarterly commodity chat with Hedley Widdup. So Hedley, the gold was the commodity of 2024. There's no denying that. It kind of came out of nowhere, but how much is left in the tank for gold in your opinion?
Yeah, it's an interesting one, isn't it? I mean, it was hard to bet against come the second half of last year. But, I suppose the question is, particularly with the election of Donald Trump, that could be a turning point. I tend to think gold's been driven by such unusual central bank buying that we really haven't seen for a long time, if ever before. That's going to be hard to bet against. So for me in 2025, we probably see a little bit of a ruffling of feathers as Donald Trump comes to office, which is probably pretty typical for him. But in gold, I see that robustness continue. But I mean, what do you reckon? You see a lot of the market, particularly from the retail side of things. If they swing behind this, that could be a strong effect as well.
Yeah, I think definitely looking at the earnings season coming up in February, that will be a really true telltale of how our gold producers are going. But I also look at the Chinese data and how much the Chinese central bank is, the People's Bank of China is buying up gold right now, and it's more than ever. So that just says that everyone's trying to get not only the safe haven nature of gold, the true store of value, but they're trying to decentralize and de-risk themselves by getting this gold bullion. So it really has been the kind of tale as old as time that gold is the fundamental store of value, and investors are really taking that safe haven nature on a retail side and really kind of bolstering their portfolios with a lot of gold right now through ETFs, through physical gold, through the gold miners and producers. So I think the tailwinds are definitely still there. We've got rising geopolitical tension around the world still. We've got Trump now finally in office, and overnight I did have a look at the gold price. It was up overnight after his inauguration, so that's a pretty good sign. So I definitely think there's still some room in the tank. It's at 2,700 an ounce US right now. So I look forward and I look at what's coming up, and there's not enough high grade gold coming through the markets right now for how much demand there is out there. So I definitely think gold has a lot more room to run, and it's because of markets being at record highs right now. We're looking at across the board, they're at record highs right now. Investors don't know where to jump into, so they're looking for that safe haven nature of gold. So I think gold has a little bit more to run.
Can I add to that? And I don't mean to make an example of something that
Yeah.
I got righter than you did, but in April at a
I love
gathering
this.
in Adelaide, which was put on by the RRS friends of ours,
Yeah, yeah.
and I think we're going to be catching up again quite soon, actually,
We
in
are, we
Brisbane
are.
with them. So Paul asked us, Christmas Day 2024, what's your prediction? And we were all sitting there like rabbits in the headlight going,
We had no
we
idea.
now need to guess a number. Now, my premise was to say if gold keeps going up, it's going to surprise us to the upside. And that was
Yeah.
the only point I was making at the time. And I think on the basis of my prediction, I was probably closer to the mark than you were at the
Yeah.
time.
I
But
think I went pretty safe and said 2,500.
I think you said safe but up, and I said, well, if it's
Yes.
going up, it'll go up further.
Yeah.
And so
I'm pretty sure someone said 2,700. Might have been Chris Judd. But
circumstance had it going in that direction. But
yeah,
I suppose the point is, when gold goes into a bull market,
yeah,
there's no price that anyone will pay that is based on valuation for gold. It's based on what people are prepared to pay. And at the
exactly.
moment, the Chinese central bank is prepared to pay 2,700
Anything.
an ounce easily and in
Yeah.
volume. So that says to me, this is a bull market happening. Supply is not rushing to the market. We're not seeing annual
No.
increases in gold production. So this is a construct which could last for years. And when gold does that, it doesn't do 2x, which is what it's done. It
Yeah,
does somewhere between 3 and 10x. So
exactly.
it
And
looks pretty positive for
I'm
me.
really intrigued to see the results coming out. We've seen some record production come across different producers out there recently. I think Regis Resources had record production recently. Gold Road's another one to look at. So in February, I'll be really eager to see what their production is like as opposed to sales, whether they're looking to hedge again in the future. Because when they do hedge, that's when I kind of get bit of an if going, oh, the producers themselves are seeing an end to the bull market if they start looking at hedging again as opposed to the spot market. So that's kind of a factor that I definitely look at when I'm looking into their results come February.
Yeah, I had the same points in mind actually, but maybe we can unpack that hedging one a little bit more when I see you in February in Brisbane.
Yeah, sounds good. Now, talking about another commodity, I know gold, we've done gold too. Gold is the commodity still, but copper is really needed in this green energy transition. But looking back last year, it didn't do that much, and now the price has actually finally come up. Now, copper, the fundamentals are there for it to continue running, like it should run. What are your thoughts on copper?
Well, it's an interesting one because it's got the strongest fundamental of just about any commodity, and that's just because
Right.
it's so bloody useful,
Yeah.
and it is substitutable, but it doesn't tend to be, right? So copper
Yeah.
plays this part in the world which you can't replace with anything else. And bring on a green transition, it becomes even more in demand. So, the fundamental for copper says this should be strong. And in 2024, and take that trend back to 2020 and look at over a few years, copper has been one of the least weak commodities
I know.
to perform. So it's really held up. Whilst I mean,
Yeah.
lithium's been terrible, nickel on the nose,
Yeah.
iron ore, etc. They've all been weak and shown this cyclical turnover. Copper hasn't.
Mm.
So on the one hand, I see the fundamental, and over the long term, 10-year outlook, I think copper will be fabulous. And in that time, I think it will probably find a new range which is above the price it's hit up against for the last 20 years. For the next 12 months, though, I wonder if copper is going to have a bit of a crappier year than everything else on the basis that it's
Yeah.
just held up with speculation behind the price.
Yeah.
So I'm really not sure about copper. I think it's a great place to be, but I see short-term weakness. But what about you, Grady? I mean, you look across a bunch of other commodities there. So what's on your mind, copper or others?
Copper still. I think the way in which BHP is going really hard at copper kind of suggests the way forward for the market. I was really just as surprised to see Rio go hard at Arcadium, but I think they're going long-term play here. They're not going short-term play. But copper it's fundamental. It's for everything. It's with data centers, digitization. It's with everything. Wind turbines. It's needed for that energy storage and energy transmission. So it's not going anywhere fast. The price of copper is actually up 15% over the last year. So again, as you mentioned there, it's strong, it's rallying, and it's not, I don't see a pullback as much as a lot of people do. But the question I have and the fundamental misunderstanding I have is that a lot of the small newcomers to the market with copper are really underperforming the market, but they're in the right place at the right time. So I'm really like, what are your thoughts on this? I don't understand.
Well, I think when you look at, say, the copper space, it's a lot smaller than the gold space. So we were
Yeah.
talking before about the producers, and record gold prices produce record margins and record cash flows, and that's what the gold guys are seeing. I think a lot of the newcomers to the copper space, or the smaller players in the copper space, are playing with assets which are just more challenging to extract cash from.
Hmm.
And copper mines tend to have a much higher working capital requirement, so they have a large amount of money needs to be constantly invested in order to make them run. So you're really trying to play for efficiencies, and that's where some of the bigger companies tend to be able to make it work. So
Yeah.
I've cast my eye over a number of the smaller coppers and come to that conclusion. They're either in need of a bit more investment or
Yeah.
they're in need of a resource expansion or something like that.
Yeah, well, speaking about that, it's really interesting. I read recently that it takes 17 years to get a copper mine into production, whereas a lithium mine's about 4 years. So I kind of look into maybe 2026 and see that the undersupply of good grade copper and coming to market and near-term producers, that's when we'll see the real tailwinds come in for copper. So that's where I've been looking. But other commodities, as you mentioned before, nickel definitely is on my radar. I know that's needed for the green energy transition, but I don't see it from Australia, unfortunately. I know Bell Potter has a buy rating on nickel industries, and their productions out of Indonesia are simply phenomenal. They have got low cost, high grade nickel, and that's exactly what's shaking up the industry right now. So, nickel and nickel industries have outperformed the nickel commodity price recently, and there's no wonder why they're doing such a good job in Indonesia. Unfortunately, for all of our other nickel producers in Australia, so that's one that's shaking up the industry there and really shaking up the way in which we get nickel out of the ground and nickel into the market. But steel and iron ore, I wanted to touch on this because China, we've got the recent economic data. China is finally starting to show some ground on material turnaround and some growth in their obviously GDP in Q4 was 5.4%. That's above the 4.6% recorded in Q3. We've got growth in retail sales. We've finally got growth in industrial production. Are the fundamental turnaround there? I think so. And what do you see on the outlook front for steel and iron ore as a result of this?
Yeah, it's a perennial question, isn't it? Because in the last 20 years, we've got used to iron ore being the commodity, which is essential. I mean, if you go back 20 odd years, it became the commodity, which was a critical mineral, and it was absolutely needed for the massive expansion of the Chinese economy. So it's kind of found this new place in the world market. What we're seeing, or what I'm observing, is a large amount of production which is going to come online from Guinea, which will benefit Rio Tinto. They will be involved in that. BHP won't. And of course, we've got Brazilian supply, which has endured some challenges over the past, let's call it 10 years. The Chinese aren't growing as rapidly as they were. And when they pushed commodity prices into this new paradigm, which was $100 to $200 iron ore, they were growing at 15% per annum. They're not anymore. But I think the ability to maintain it at a price which is, positive from 100, there's some capacity to do that. It's just, I think the Chinese economy is something which is more challenging now than it has been, and it's coming under much more central control. Do they want to pay $150 a ton? Absolutely not. Do they want to
No
pay
way.
80? So let's see which direction it goes from there. I think it'll probably become more range bound than it has been in the past, is the best observation I could make.
Yeah, completely agree there. And as I saw literally yesterday, China's steelmakers head for production cuts again. So demand is down, but it's really a watch and wait situation in
Yeah.
China right now across the board. I don't envy anyone with exposure, any companies with exposure there, because in one breath we have, oh, China's finally got a stimulus package coming through to material growth, and then in another breath, China's steel production is cut. So it's really a watch and wait. And I think it will be for a little while to come.
Yep.
Now, talk to me about the M&A space. Now, M&A is kind of really ramping up. We haven't seen too much over the last few years, but recently it's been all guns blazing. Talk to me about what you're seeing there.
Well, I think the people which seem, in my mind, to be most desperate to do deals and grow is the golds which have come into this phenomenal cash flow. So I see huge interest there. We've seen
Mhm.
Newmont sell a bunch of projects. In Australia, Telfer has been topical because that's the one that we've seen them deal on most recently.
Yeah.
And there was a willing customer there for it. So I don't think that there's any lack because the market understands golds so clearly.
Mhm.
There's an ability to grow in that space, and bolting something on is a great way to create mass in the market. So I see that as being something that we can see deals in from big through to small.
Yeah.
And Northern Star's going for De Grey, which is a signal to
Yeah.
say we are prepared to grow, which I think is a great signal from Australia's biggest gold company. But
Exactly.
we've got Ramelius owning circa 20% of Spartan. I know that's a company that you've spent a lot of time on,
Yeah,
close
that
to.
was a massive play last year. I was
Yeah.
actually speaking to Simon about it. I was like, what do you think? Is that watch and wait, mate? So we don't know. We don't know. So, but I
Well,
found a funny one was Gold Road Resources and Regis Resources. That was a takeover talk, a merger talk last year. Do you think that could be on the cards this year? I'm not sure.
Well, the glib answer is I think the golds in that size space would be foolish if they're not talking to each other and
Yeah,
sensing, is there a way that we could come together and let's have a think about what the value might look like if we do? Because typically, particularly as you're getting institutional investors needing to hold some gold exposure, the bigger you are, the more of that you attract. So 1 + 1 can make. It might be 2.2, it might be
yeah,
2.5, it might be 3. So that's maybe not as gameable as it was 4 or 5 years ago, but it's definitely something which I'm sure they have on their mind. And with that breadth across your portfolio, you can produce better and more stable earnings. So
exactly.
I think they must all be talking. We saw an instance which was peculiar last year of Westgold going for Karora, and then there
Yeah,
was a takeovers panel application by Ramelius, which seemed to be in relation to some discussions which had taken place between Ramelius and Westgold. So
yeah,
clearly there are companies talking. But
yeah,
outside of gold, we've seen headlines relating to Rio Tinto and Glencore. I'm not sure.
yeah,
I think of M&A as something which happens in a growth market. So for
yeah.
them to come together would have to satisfy either one paying up for the other,
Yeah.
See either of them wanting to do that. So it needs to be a merger of equals.
Yeah.
And then there's an enormous political, gamesmanship around who's going to be in what seat.
Yeah.
Again,
Who's
very,
in
very
power?
challenging them.
Yeah.
Now, the synergies are doing it. Clearly, they would both be interested in each other's copper assets.
Yeah.
Um, Glencore has an exposure to coal, which might not satisfy the Rio register nearly as much. So I think there's a lot of water to go under that bridge, and I can't help thinking that headline was something which is a market mechanism to say, well, what does everybody think about this? And it doesn't look to me as if
Yeah.
the market's lunged at it, other than to say, well, that's fascinating, isn't it? Because it hasn't seemed to progress from there, and everybody's played it down.
Yeah, I wonder if it came from actual fundamental talks or whether it was speculation. So I think looking forward, I think the metallurgical coal assets could be pretty good for Rio. And obviously, with the outlook for China to turn around, we're seeing the metallurgical coal is needed for steel demand. So whether that is the case, and then obviously the copper assets is what Rio wanted in the first place, but BHP went harder at. So I think it's a really, it is a watch and wait market right now across the
Yeah,
board.
absolutely.
Let's move on to some companies or a company you're looking at in the last few minutes here, a company you're looking at in 2025.
So one of the companies that we're looking at in 2025, and on some podcasts you have to go ding 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 when you already own it, but
Yeah.
we're involved with a company called Saturn. They've got a
Mm.
gold project in Western Australia. It's not built. It's enormous. They've got a resource update coming up, and they're talking about getting started at a small scale via a pilot plant approach to processing.
Yeah.
Unusual processing in that it's heap leach rather than what you would typically do in Western Australia, but it's got fabulous economics. So that's something that we're going to be spending a lot of time on in the first half of this year. And, I think their strategic moves which come after that are going to be quite attractive. So
Yeah.
we're looking at that one. We've already bought it, but we're going to, I think, probably be buying some more as time goes on there.
Yeah. Well, for me, I'm actually, as I said, in the copper space. I'm looking at AIC Mines based out of Queensland. They've got an asset in Queensland, the Eloise Copper Project. They're already producing underground operations there. They've got a clear pathway to ramp up. They've got gold as well. So copper and gold, the two metals that are kind of paving the way forward for commodities right now with some certainty behind them as opposed to the other commodities that are so volatile right now. They've got really good management at the helm. They've done it before. So yeah, AIC Mines is definitely on my radar in 2025.
And Aaron Colleran, of course, who heads up AIC, was
Yes,
instrumental in the growth of Evolution. So,
exactly.
you talk about safe sets of hands. I've
Yes.
got a lot of time and respect for Aaron, and
Yes,
I,
Aaron and the team there. So Joseph as well, the chairman. So they've done, yeah, a really good job, and I'm excited to see what they can do and how much ramp up we can see out of them this year.
great name to be looking at, Grady.
Hedley, as much as it's been great chatting to you today, and thank you for our quarterly update, I'm more looking forward to February. What are we up to?
Well, this has been far too short, hasn't it?
Yeah,
And I think we're going to
always.
get a much longer opportunity to unpack what we think's going on in the market when we get together on the 13th of February in Brisbane for
Yeah,
the RRS Summer Series. And I can't remember how much time Nicholas and Sharon have allocated to us, but it's going to be a lot more than 10 minutes. And
yeah.
we're going to be able to talk about M&A themes, hedging themes, gold, copper, commodities, all of that stuff. And as I understand it, it's going to be a one-on-one conversation. So there's not going to
It's
be any
exactly this, but in
derailing, guessing
person.
questions from
No,
Paul. It's going to
yeah.
be concepts.
Can't wait. So thanks for your time today, and I'll see you there on February 13th in
Thank
Brisbane.
you. Thank you, Grady. I'll see you there as well. I can't wait.
With gold having more left in the tank on this year, and copper is needed, but how will the price fare this year? And AIC Mines and Saturn are on our radar for 2025. I hope you enjoyed my chat with Hedley Widdup of Line Selection Group. Be sure to subscribe to the Bell Direct YouTube channel to stay up to date with all market commentary, exclusive insights, and interviews like this chat with Hedley. Also, be sure to secure your spot at the Resources Rising Stars Summer Series Conference in Brisbane on Thursday, the 13th of February. Myself and Hedley will be there to talk all things commodities and the outlook we've just discussed. I can't wait to see you there.